Hello friends, I am Rohan Sharma. I am your mentor in this program. Today we discuss mutual funds and its structure. First of all, we have to understand what is a mutual fund. A mutual fund is an investment vehicle that pools the money from large group of investors and invest that amount in stocks, bonds, money instruments or other type of securities. In mutual funds, an investor can access to markets not directly but by the fund managers with a very high professional fund management services offered by the asset management companies. Those investors which do not have knowledge or energy or time to understand the market or participate the market on day-to-day basis, they are prefer mutual fund in first place. In simple terms, mutual funds are like baskets. They pool the money from various investors and invest as per their investment management agreement. Mutual funds, each scheme is unique in its nature. It holds certain type of stocks, bonds or blend of stocks and bonds to combine one mutual fund portfolio. Now we discuss how the mutual fund process will be happen and how the money will be pooled, how it is invested and how the investors get the returns. So we show a picture on your screen by which you can easily understand the whole process of mutual fund working. First of all, the investors are come together and pool the money and given that money to their fund managers. These fund managers invest this whole money into securities or other kind of products, investment products, and that generates returns and pass it back to the investors. That means the pool of investors that they collect the money is for the goal of generating returns. So those who want to start their investments, they can also start with mutual funds. There is a various roles of mutual fund play in the financial markets. Mutual fund pool resources from investors, small or big, and thus increase the participation in the markets. Money market instruments have hugely benefited from the increased mutual fund participations. Mutual fund assist the investors to earn income or building their wealth. The money that is raised from the investors ultimately benefits the government, the companies and other entities. The mutual fund industry has given a livelihood to many peoples by generating huge employment opportunities. So mutual fund is benefited to all of us, whether it is an investor or a mutual fund company or open markets, government or those people who are engaged in the employment with mutual fund industry. Now we have to understand who can invest in mutual funds. The resident Indian individuals, Indian companies, Indian trust charitable institutions, banks, non-banking financial companies, insurance companies, provident funds, non-resident including NRIs and body corporates, and SEBI registered foreign entities can easily participate in mutual funds. They can do the investment activity through mutual funds. Now we understand the mutual fund structure in detail. In the mutual fund structure, there is two major parties. We work as a client and the regulator. The SEBI is considered to be the regulator as shown on your picture on your screen, and the unit holder is the client which use mutual fund and pool the money for their investments. In the mutual fund structure, the first important part is come with sponsor. The sponsor is a person or an entity which have enough experience in financial markets and who create or promote the mutual fund company. The sponsor create a trust, and the trust has become a mutual fund company. The mutual fund companies is always be a trust which supervise the fund of the public according to the investment management agreement. In the same organization, there is another organization called AMC, which is Asset Management Company, which manages the fund as per the investment management agreement. So we think that the sponsor will promote the mutual fund company. The mutual fund company itself is a trust, and he supervises the funds as well as the activity of all others. And the third important is AMC, which is to be asset management company which manage the fund, which invest as per the investment management agreement. Apart from this, there is another intermediaries. The first is registered transfer agent, which maintain the records of investors, and the custodian who hold the stocks, bonds and other certificates on behalf of mutual funds company. So this whole organizations as a club is considered to be a mutual fund structure. So now friends, we discuss fund sponsor first in detail. The fund sponsor is the first layer in the three-tier structure of mutual fund in India. SEBI regulated that fund sponsor is a person or an entity that can set up a mutual fund to earn money by fund management. Fund management is done through associate company which manages the investment of the funds, which is called as asset management company. A sponsor can be seen as a promoter of the associate company. A sponsor has to be approached with SEBI to seek the permission to setting up a mutual fund company. And this mutual fund company is considered to be the trust of that whole fund. There are some certain eligibility criteria set by the SEBI for the fund sponsors. The sponsor have the experience in financial services for minimum 5 years with a positive net worth for all previous 5 years. The net worth of the sponsor in the immediate last year to be greater than the capital contribution of the AMC. The sponsor show a profit in at least 3 out of 5 years in which the last year will be in profits. And the sponsor must have at least 40% share in the net worth of asset management company. So sponsor is also apply or clear some of the eligibility criteria that is given by SEBI. Now the trust and the trustee will be the second layer of the structure of mutual fund in India. A trust can be created by fund sponsor in favor of the trustees through a document that is called as trust deed. The trust is managed by the trustees and they are answerable to all investors. They can be seen as a primary guardian of funds and assets. Trustees can be formed in two ways, either the trust company or a board of trustees. The trustee work to monitor the activities of mutual fund and check it with the compliances or the regulation provided by the SEBI. They also monitor the system, procedures, overall working of the asset management and company. Without the trustee approval, AMC cannot float any scheme in the markets. The trustee has to report to SEBI every 6 months about the activities of asset management company. Now the asset management company is the third layer of the structure of mutual fund. The asset management company acts as a fund manager, as an investment manager for the trust. A small fee is paid to AMC for managing such funds. AMC is responsible for all fund related activities. It initiates various schemes and launches the same along with the trustees. The AMC is bound to manage funds and provide services to the investors. It solicits these services with other elements like brokers, auditors, bankers, registrars, lawyers, etc., and work with them. To ensure there is no conflict between the AMC, there are the certain restrictions imposed on the business activity of the companies. Now we discuss the custodian in detail. The custodian is responsible for safeguarding or safekeeping the securities and certificates of a mutual fund company. They manage the investment account of the mutual funds, ensure delivery and transfer of the securities. They also collect and track the dividends, interest received on the mutual fund investments. Registrar and transfer agent is also play an important role in the mutual fund structures. Registrar and the transfer agent will maintain all investor record of mutual fund unit holders. The mutual fund companies are economy in scale and cost effective for all 44 AMCs see the service of the RTAS. CAMS, Carvi, Sundaram Principal, Tampton, etc. are some of the well-known RTAs in India. Processing investors' application, keeping a record of investors' detail, sending out the account statements, sending out the periodical reports, processing the payouts of the individuals or dividends, updating the investors' detail, adding new members or removing those with the withdrawal from the funds. So at large, the registrar and transfer agent will maintain the investor's record and keep it changes if there is a requirement. I hope so you understand the importance of mutual funds and its structure in a well-mannered. If I conclude this lecture by 3 major points, the first important thing is that the mutual fund trustee is the main person in the mutual fund company which supervises the activities of AMC and which is powered by fund sponsor. The another thing is the mutual fund is one of the best alternatives for the new investors who don't know about any markets and anything and which don't have any knowledge or expertise or time to directly invest in the markets. And the third important thing is before selection of any mutual fund company, you have to understand its structure in a well-mannered. Thanks a lot. Have a nice day.